Well, hello again, Solis Wealth family. Greg Solis here for the market update. Everybody's doing well in the Solis family. Nicole has a job. Pretty awesome. I get a call from her the other day actually saying she saved a few bucks and would like to open an account. Proud day for dad when your daughter wants to open an account while still in college. So she's doing well. Celebrated Jack's birthday this last weekend, 22 years old, as I mentioned during our last conversation. It's awesome to see him become a young man. Right before my eyes. Had a lot of his friends over. The funny thing I noticed about these kids, once they come, they don't leave for a while, but we had a good time. Emily's doing great, driving around. Seems to be a great driver, so knock on wood, thank the good Lord that she's doing well. But Emily is driving back and forth to school and dance, and it's definitely changed our life a little bit. So Monica and I are having a great time with that. Market-wise, again, the market continues to be pretty volatile. The S&P 500 and the Dow have held up pretty well. I mean, they're only down, 1% to 2% or so. The NASDAQ, on the other hand, as I mentioned before, was in a full-blown correction, down over 10%. Now we're down, 7 to 8% in that range. So it's definitely taken a harder hit, but it also had the biggest run-up. So it's just been an extraordinary run on the NASDAQ, and with rates going up and a lot of things going on as far as valuations are concerned, I think there was some profit taking, but it seems like the buyers come in and it seems like it's starting to stabilize a little bit. So we still remain pretty optimistic for 2021. Some of the numbers coming out, projections for GDP, I've seen them as high as 8% is what they're anticipating the GDP growth rate will be. That's the gross domestic product, which measures the growth of the economy. That would be one of the highest since 1951. But it was also a very deep recession. So we're coming off a low base there. It was one of the worst recessions since the Great Depression. So we would expect a high GDP number. The question is that good for stocks? Well, you got to remember, as you hear me say a lot on these commentaries, the stock market is a leading market indicator. So I think most of those gains have been priced in, and that's why we saw such an extraordinary move from March of last year, of 2020, to where we are now, is the market was already pricing in this massive growth that we would see in 2021. So the question is, well, does it have room to go? Well, we believe there is room to go. We believe that there's still a lot of pent-up demand. We believe there's a lot of money in the system with the quantitative easing and the stimulus package. Now the vaccines are cranking out. Now we're up to 2.5 million people getting vaccinated per day. That represents a big chunk of the country. So we believe there's some room to go. We believe that the markets will continue to do well in 2021 and 22. But we believe there's also going to be a lot of volatility. And it may not be as much as we've seen since March of last year, because that was a huge hit in the market. And we had a long ways to go to recover, to price in the kind of growth that we're going to see in 2021. But all that to say, everything's in good order. Everything seems to be moving in the right direction. Portfolios are doing well. But if you have any questions, concerns, or there's anything we can do for you, please don't hesitate to give us a call. And again, we look forward to getting together with you real soon in person. That'll be nice. So take care and God bless. Bye-bye.